Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Welcome, folks, to our Tuesday show. It is March 31st. Grateful to have you all with us today. Seth Udinsky, Sam Case, and your host, Mark Manila. Mark, good morning to you, brother. Is Mark with us? I actually couldn't hear Mark there, but I assume that he is with us. And it is great to have you all with us as well. Samuel Case with us here also. Hey, I hope that you will give us a call this morning, folks. 610-363-1110. I apologize, guys, if I'm having issues in my ear, but we're going to keep on rocking and rolling here. There's Mark. Mark, are you...
Is there something in your ear?
It must be something. So, Mark, there's this visual aid that I have here, folks, of a tiny little mark in my ear. I know that's not actually true, Mark, that you're actually in your studio, in your bunker
He's like a
in
gnome.
the Midwest there. But we're grateful to have you. And I can hear you now, so this is all good. 610-363-1110. Mark, how you feeling this morning? Ready to rock and roll?
Yeah, absolutely. Let's do this.
Let's do it. Well, you know, guys, interesting things. Some things in life should be private, obviously. There's some things in your life that should be private. But should your 401k funds, should they be invested privately? Well, we'll discuss. Apparently, that talk is being kind of workshopped, a little bit by President Trump and his team. So we'll see what's happening there. But first and foremost, Mark, yesterday, as we were talking about the markets a little bit, the conversation came up of utilizing a stop loss order in times where the markets can be going a little bit crazy, when they're going down like we saw. So what is a stop loss order, Mark, and how would we use it well?
Yeah, a stop loss, so it's just a tool. It's just another type of order when you place a buy or sell, but it's a sell order that you put in, but it doesn't sell at market. You put a price of where you want it. If the markets hit that, if that stock drops to that price, it automatically goes to become a market order. Now, that's really important to realize. A market order means it just sells at whatever the next bid is that can take it in. Sometimes when the markets are dropping real fast, that means your stop loss might be here, but it might sell way down here, so you have to be careful about that. Also, I like the idea of stop losses in the sense of it can take some of the emotion out of selling. It also can help some people with sleep factor. But knee-jerk reactions of the market can stop you out of perfectly good stocks. I remember a long time ago when I used to use them, I stopped using them because of this. But the market, something would come out in the news and the market would pull back real hard and real fast. And then all these stop losses would get triggered. And then within minutes, the market would start heading back up again. And I'd miss good rallies because of it. So stop losses have their downside as well as their good. Here's what I did instead. Over time, instead of using stop loss, actual automatic stop loss, placing these orders with my platform, what I'd do is I'd set alerts on the stocks that I was concerned about. And I'd set alerts that would tell me, like give me a ring when this stock, if it ever hits this, much below where it is now. So when I get those, I'd then go review the stock and see if, am I worried about this? Is it just a knee-jerk reaction to the market? Or is this something I should be concerned about and go ahead and get rid of this stock because it seems like it's on a solid downward trajectory and not just a knee-jerk reaction?
So, Mark, it's kind of like almost like a manual stop loss order. You get the alert on your phone. You make the choice ultimately to actually sell it or not. Makes sense.
Right. It's a manual stop loss. That's what it really is. And there's nothing wrong with setting these because especially on some stock, let's say that you're in a growth and income portfolio and you're very concerned about downside of the market. Well, you set these alerts at your favorite website, whatever it might be. Most financial websites will give you the ability to set alerts on things, and then you don't worry about it and you just let it go. Then when you get an alert, you go look at it and you say, okay, what happened here? This dropped this, and this. Let's look into it. Oh, they came out with this news that, their plant burned down and they won't have any fulfillment for the next 3 years. Well, it's time to sell that. Maybe we shouldn't sit in and wait for them to rebuild or see if they even do rebuild. Let's move on. That kind of thing. And so I like the idea of setting stop alerts. I used to have a thing where I would set everything at 10% of where I bought in, because I would set one at 3% and one at 10%. And you say, why 3%, Mark?
Mark, do you mean alerts or actual stop losses?
Alerts. Alerts. Because one of the things I was going through in my money management at that time, we cut our losses very short. If something dropped 3%, there's a good chance we get rid of it, unless it was just a rock solid company and or its trading band was much more than 3% on an average day. So we set our stop losses, our alerts, at 3%. If it dropped to that, we'd immediately dig into that stock and see what's going on, because we want to cut our losses short, and then we let our runners run forever until they pull back. So anyway, there's a lot of philosophies is what I'm trying to say about this. Sure. But one of the things a stop loss can do for you, if you don't do it automatic, but do it manually, is it can bring awareness and keep you conscious of what you're involved in and why. And that way you can go back and review it when you get an alert and say, oh, this dropped 10%. Is this really, or 5%, or wherever you set them? You want to be careful where you set them. Otherwise, you'll get 6,000 alerts a day, because it goes down 3% and then jumps up 5%, then goes back down 3%. It can
especially
get
crazy with the level of volatility we've been seeing recently.
Right, exactly.
Yeah.
And this is, way too many times it happened where actually I got stopped out when I had automatic stop losses. I got stopped out of a stock, which means it sold off. And then within the same day, it turned around and began an incredible rally. So you want to be very careful about using them. And only, in fact, I don't even ever use them anymore, stop losses.
And Mark, I had a question from a more my specific situation, and I'm sure our younger investors out in the audience might be wondering this too. And by the way, folks, 610-363-1110, our phone lines are open. Mark, here's the question that I'm thinking about with this. So I'll just pull the curtain back a little bit. My portfolio this past couple weeks, it's looked crazy because of everything that's been happening in the markets. Obviously, I have much more of an aggressive portfolio. I personally am not as concerned with the crazy swings of the market, because I plan to be in it for the next 40 years or so. Should I concern myself with a stop loss order, or someone like me who's in their 20s or 30s and they're in it for the long run? Maybe they're in some really aggressive plays. Should we concern ourselves as much with stop losses, or is that more for the growth and income-minded investors? Interesting question.
What I'd like to say in it is that you're in an incredible place, because you're not only have a lot of time to recover from maybe bad decisions or bad markets, but you also have financial issues.
Yeah, right.
And that's important, because if something gets too stupid, if we believe it's not going to recover over a 3 to 5 year period or something like that, we're going to alert you. We're going to say, sell this puppy. It's lost its financial issues, steal, and or the market, or its potential. The potential can go away too. For example, in technology, I remember so many things in technology that you don't even hear about. You don't hear about floppy disks anymore. Well, if your company, if that's what you made was floppy disk, and you never adapted to solid state memory or things like that to thumb drives, you probably are out of business now. So your potential can go away, as well as your financial issues steal. But that's what we're here for. We do the analysis weekly. We review things and we go through it and we try to find those things. Now, it doesn't matter how many analysts you have. You could have 1,000 analysts and you'd have 1,000 different perspectives on each stock. But one thing it does do is help you to know that people are looking at it and that they are trying to figure out, is this still a long-term buy? Now, oftentimes you'll see us go from a buy to a hold on financial issues instead of from a buy to a sell. And what that means is what we've seen is its potential may have slowed down or something has gone away, but it doesn't mean it can't turn around and won't. Either some of the financial issues still, the fundamentals have been weakening, and or its potential has been weakening. And as we figure that out, we just let it run. But we don't suggest people put new money into it. We just say, if you have it, go ahead and hold it if you want, or you could replace it with something else if you find something better on the buy list. That's all we're doing with the hold. But you have that. Other people don't. And you have us right now, all you listening, and you can get your questions answered at 610-363-1110. Why don't you give us a call? We'd love to continue this conversation with you.
Have you ever wondered? My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. I became a partner with Financial Issues, and it's been one of the best decisions I've made. Invest your money in a God-honoring way. Go to financialissues.org.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Six 610-363-1110. We got lines open, folks. Give us a call. Mark and Sam, the markets last week, or really the last month and change, they've been absolutely battered. They were unsure what to do with themselves yesterday as we opened the week. The Dow Jones finished positive. The other three indices, the S&P, the NASDAQ, and the Russell 2000 were all down. However, the pre-markets this morning seem to be feeling very strong, again, after reports are saying that Trump is looking to end the Iran war. So that's the story that it's been. But the Dow Jones, S&P, and the NASDAQ all pricing in to open above a percentage point right now. So interesting
Seth,
stuff.
It feels like Groundhog Day. I feel like I've heard this headline 5 times in the last 2 days.
That's exactly right.
No way.
How about the last 5 weeks?
Yes.
It's unbelievable. 610-363-1110. So, Mark and Sam, it is tax season, and we are seeing many people have already filed their taxes, getting those tax refunds in. Sam, give us a quick update here with what's going on with the tax refunds.
Well, things are looking pretty good. According to Treasury Secretary Scott Bessent, he said that 44% of tax refunds, or 37.5 million Americans, have claimed benefits from at least one of the new tax policies from Trump's One Big Beautiful Bill, including no tax on tips, no tax on overtime pay, no tax on Social Security, or even those deductions for car loan interest. The average refund so far is over $3,500, and that's up 11% from last year, so pretty good.
Yeah, good stuff. Yeah.
It does sound like good stuff, but it sounds like exactly as promised, doesn't it? Didn't we hear Trump promise these things? Didn't he say, wait until the refunds come and people will start seeing it? So seeing, 10, 11% increase in refunds is a good thing. And it's absolutely something we want to celebrate, that says we're heading in the right direction. But you know what? I think we have to be really careful in how we frame this, because what this tells me, all these people getting these refunds, Seth, this means that a lot of people are over withholding and actually just giving a loan to the government,
Mark,
for a 0% loan to the government, while they're paying 29% on their credit cards, or 15% on a bank loan, or 9% on their mortgage. They're paying all this interest throughout the year to loan the government this money to get a lump sum back at the end of our 14 months from the beginning of that period, which is kind of crazy to think about, instead of just adjusting your withholdings to truly reflect your tax
Mark,
liability.
just think about, say you go with that average of $3,500. If you have that for the whole year, you just put that in a money market and you'll make, a couple $100 on that, It's crazy.
You're losing money either way you go by loaning it to the government. Now, I know a lot of people like getting that check at the end of the year, but when I was in my practice, I would see new clients come in and they say, oh yeah, every year we take our tax return and we pay down our credit card. But in the meantime, they paid 19 to 29%.
Yeah.
Or every year we take the money and we go on vacation with it. Okay, well, if you would have taken the money paycheck by paycheck every month or biweekly or however you got paid, and like you said, put it in a high yield money market, you probably could do a little better vacation than you could getting your money back from the government. Anyway, I just wanted to bring that up. I love the idea that people are getting better returns, and the average being 35, that means we're seeing 3,500 hours on the average return. That means a lot of people are getting a lot more than that back, and that's what threw me into the financial planner state of maybe you should readjust your withholding so it more accurately reflects your tax liability.
Mark, but isn't this year kind of the weird odd man out, because all of these new policies are there that you couldn't really have adjusted for just yet?
That's a possibility. But they said it was going to be backdated to the beginning of 2025.
That's true.
Right. So people should have at least known about it. Yeah,
they could have started somewhere along. I'm not saying they're bad. You got too much back. What I'm saying is, now that that's happened, think about this. Make the most of what God has entrusted to you.
Oh, that's all. I mean, Mark, this is
Here's an opportunity to do better.
Yeah, I mean, and we hopefully people don't assume that we're saying it's a bad thing if you get a tax return. It's better. I think good versus best. Good to get a tax return. Best to get paid what you should get paid throughout the whole year. Right. Like that seems to me what.
Now, Seth, there are some people that if there's money in the bank, it gets spent. So some people actually realize that, it's better that I lose the interest or lose that I don't have it, and then we can do something with it. But we got to take that to the next step. If you're buying groceries on a credit card because there's not enough money in the banking account, then we need to rethink this.
You're losing money, the interest.
Yeah, exactly. Absolutely. Mark, we got an interesting question here in light of all of this, actually. We have a listener, this is at Odevera81, I believe from YouTube, so thank you for this question. They were saying, hello there, me and my wife we adjusted our withholdings, and we ended up owing the IRS. What did we do wrong? Well, Mark, did they do something wrong, or did they actually do something right?
Well, that'd be hard to understand with the limited information.
Yeah.
If you adjusted your withholdings, and it was based on last year's taxes, which that's all you have to use is the previous year's taxes. That's good. You would have calculated what you needed to change, how much you needed to change to bring it closer to zero. That's a good idea. If, on the other hand, you did that and then there was a change in jobs or an increase in income, and that kicked you into the next tax bracket, or maybe that you sold off a whole lot of really good stocks last year, and there was massive capital gains and stuff, and you didn't take that into effect. There's a lot of things that could affect it. It depends on how you file. Is it a short form, or do you have multiple forms, that kind of thing. So the thing with adjusting it to make it close is you want to make it close. You don't have to worry about it if it's a little bit over or a little bit under. If you've been putting the money away, you've been receiving the extra money by that adjustments every month. When the tax bill comes, if you were a little short on paying the taxes, you have the money in there to pay them anyway. So that's not an issue. On the other hand, if things had changed, well, that should have been an alert to say, okay, how does this affect my taxes? Maybe I should look at this real quick and do another recalculation on what my tax bill will look at. For example, a large capital gain. Maybe you sold a rental property and made a whole lot of money, or sold your business or something like that. Well, you have to take that into effect and adjust it along the way as well. Usually there isn't that many life changes during a year for most people, but sometimes there are, and that can affect it.
Absolutely. Mark, I can't help, and tell me if you think I'm misreading this question here, but he's saying that they adjusted their withholding and they ended up owing the IRS. It does seem to me like it's just a very simple, hey, we adjusted it to try to get more throughout the year and we ended up owing. Did we do something wrong? And if it's that, I think absolutely he should know. It's better, I feel like, Mark, it's better to owe a little bit than it is to have a massive tax return, like we were saying, because that means that you're getting everything that you're supposed to get paycheck-wise throughout the whole year.
Right, and there's some tax law, and IRS law that says, if you underpaid your taxes a certain percentage, then that's an issue. But there's a ban there, kind of like anywhere else. You can underpay your taxes and then write a check with your taxes and you're done.
Yep.
No big deal. Or if it's a one-time off thing, the government realizes that as well. Like you sold a business and you didn't take into effect how that would affect your taxes.
Yeah, absolutely.
They take that into effect as well. You don't get penalized for underpaying when it's a one-time, large-time type capital gains, as far as I know. Of course, you should consult your tax advisor on all that.
Absolutely. And folks, listen, if you're interested more in some of these tax breaks that the Big Beautiful Bill offers, we did a great series earlier this year on just kind of, it was, I believe, Mark, it was like a 7-part series or something like that on just the different tips and tricks for figuring out all the Big Beautiful Bill new tax laws. So go back and check that out, folks. It's on our website. 610-363-1110. Mark, we got a call coming in from Justin. Shall we go to Justin in Texas?
Let's do that.
Let's do it.
Welcome, Justice. Glad you're here. What's going on?
Hey, good morning, Mark. Well, Seth twisted my arm to call in. So
that's what I do, Justin.
And it is.
Thanks for calling,
you
buddy.
do a good job at it. I believe in what you're doing. Buy good companies and biblical based, and you hold it long term. But, I'm a bit of an action guy, and I like a little bit of risk, and I like to do things. And I have several people, quality people, Christians, that trade puts and calls. And would you be interested to maybe, talk about how to do that? And would it hurt the stocks that you recommend if we did that? I just wanted to kind of pick your brain about it.
I don't think it would hurt at all the stocks that we hold if you do that. That's not an issue. Put and calls are esoteric in a lot of ways for most people. They're contracts for buying and selling stocks that a lot of people really don't understand. So they can be complicated. And I've seen people lose their shirt on them, mostly on things like uncovered options, things like that. So you got to be very careful. It is more trading than investing. It is more like gambling than investing, because you're never really taking, most people who are selling puts and calls aren't really taking possession of stocks. They're covering them with other orders. So you're not really investing in a company at that point. You're just pretending to get ready to invest or not invest. So I think it's a whole different world. Do I think it's wrong or do I think it's right? I don't think I have a value on that. I do believe you need to know what you're doing, because when I used to to presume upon the future of which way things are going to go. You are trying to make a very short-term gain instead of a long-term investment in society and in your world and influence things like that. But I'm not going to condemn it. I think that there's probably a way to do that, Justin, and still honor God with what you're doing, as long as your focus is staying on God and how does this glorify God? That's the main thing to be thinking about when it being involved with puts and calls, doing contracts like that. Day trading pretty much on those contracts. Now, you may not be talking about day trading, so there's so many ways to do it. And that's why I love the calls. Justin, you can stay with us if you'd like. The number here is 610-363-1110. We'll continue this conversation. Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. When an abortion-minded mother hears that sound, 80% of the time, they choose life. For $28, you can sponsor a life-saving ultrasound and share the hope of the gospel with a mother facing an unplanned pregnancy. Hi, I'm Mark Manella, host of Financial Issues, and today I want to encourage you to give to the amazing work of Preborn. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
Navigating through investment options can be
Grateful to have you here, folks. Give us a call at 610-363-1110. You know, today's show brought to you in part by our friends over at Samaritan Ministries. We love the work that they do, providing health sharing options for Christians who want to get off of the hamster wheel, so to speak, of big health care. And I got to tell you guys, it looks like health care expenses are just getting more and more expensive, quite frankly. Sam, give us the details here. What exactly is going on?
Yeah, Seth, this is a crazy survey from Gallup. They estimate about a third of Americans have made at least one trade-off with their daily living expenses in order to afford health care. And these are very major things to their lives. This includes borrowing money, cutting back on utilities, driving less, even skipping meals in order to afford their health care.
Wait a second, Sam, can I just
Americans
ask,
without insurance were, of course, more likely to report making these sacrifices. But Americans, even with insurance, also were reporting some pullbacks as well.
Crazy stuff how skipping meals somehow is supposed to lead to better health, Mark. It's unbelievable here.
Well, I first of all, this Gallup poll, I'd have to dig deep into it, but I can't, there's so many times in my life where I didn't get to go on vacations for 5-10 years. I didn't get to do everything I wanted to do. And they're making it sound like having to do one thing over another is a bad thing. That's a choice in life. Yeah. We all have those choices. But I get, and they're making it sound like, skipping meals. People aren't eating just for their health care. It's possible. It may be true. But very limited if it is. Yeah. Somebody to help us understand this is Joe Noble, Director of Public Policy at Samaritan Ministries. Joe, welcome to the show.
Thanks for having me.
Yeah, no, thanks for having me. Do you hear or see things like this where people are not driving as much or skipping meals for health insurance?
So when folks call into Samaritan, they're looking for different things. Some of them are looking for cost savings. A lot of them are looking for choice. But we do hear that their insurance that they're looking to drop to go with a non-insurance option like us has gotten unaffordable, and now they're looking for other options. So we hear that, but I also I hear what you're saying. I agree. We make sacrifices all the time. And we're going to, do a staycation this year, just like you said, because, we need to, put new siding on the house. And, you're right. People make choices all the time. But healthcare is one of them where they are making, a different choice now.
Yeah, and I'm not denying that healthcare costs haven't gone up, and we're grateful for Samaritan Ministries, the way they're able to keep it down and give more choice and freedom in their healthcare. So that's a wonderful thing. I just think that sometimes they sensationalize everything, and either that or our society is getting to be made up of a lot of spoiled brats, because I can't do everything I want to do all the time.
I think the one thing maybe. I think the one thing that probably is true is that they've now had to make the decision between the monthly premium of insurance and their deductible. That's something I've been hearing a lot and reading a lot about. Folks have dropped down to a plan that is what they can afford monthly premium, but then they end up with a deductible that is skyrocketed. They may go, from a $750 deductible that they had, they changed that in their plan, and now they have an $8,000 or $9,000 deductible. And for some folks, that's, a fourth of their income is going right towards that deductible. And that I can understand would be scary, where you realize this thing that I'm paying for month after month is probably not usable because the deductible is so high. And so I think that is probably a legit concern, is that what they're paying for is then not usable.
Right. And when you have a high deductible, you should have like a healthcare account as well, a medical account where you can save that money up so that when you have that money for the deductibles already set aside somewhere.
Exactly.
And you get to deduct the contributions to that as you're building it as well. So there are ways to do this, but it can be scary. Again, Samaritan does something a little differently, and we're really glad you do. Why don't you explain what Samaritan does?
Yeah. So Samaritan is a non-insurance option. It's direct sharing of medical needs, which the most simple way to explain that is I have 4 boys. I haven't had insurance in 25 years. When they were born, when they've had medical needs, when I've had medical needs, I've just turned that into the ministry, and then they assign other members to send directly to me. So it's a set amount based on your family size, and folks are either, doing electronic sharing or sometimes sending physical checks. And me as a member, every month I'm assigned somebody. So I either write a check or I do electronic transfer, if we have that set up. And so I'm able to help with their medical need, me and, tens of thousands of other Samaritan members, depending on the size of the need. But I'm also praying for them. And they know that it's not just this kind of faceless transaction of money. They know that I'm praying for them and that I'm sending, cards, wishing them well and knowing that they're praying for them. And so that cuts out the middleman, and it also cuts out all this unnecessary parts of insurance, all these state mandates that, require you to, in this state, insurance policy has to cover hair transplants or, even, maternity for a single guy. And I mean, it's great, the insurance covers maternity, but if you're just a single 25-year-old guy, unmarried, you don't need maternity right then in your insurance policy, but you're paying for it. And all those type of things drive up the cost. And so by cutting out the middleman, by the members being in control of what is sharing, that makes it affordable, and it also provides all kinds of control of their healthcare dollars.
Praise God. So glad for Samaritans. Thank you, Joel, for joining us today.
Yeah.
God bless you.
Thanks for having me. Yeah, you too.
Great stuff. Appreciate Samaritan Ministries so much, Mark. Hey, we got a call coming in from Steve in Iowa. Mark, why don't we get to Steve?
Let's go to Steve. Steve, welcome to the show. What's on your mind?
Well, one thing that I was going to ask, but you kind of answered right after Darlene put me in the queue, was how aware people are of medical savings accounts, because that's one way to get. And I've heard you mention them before, but I'm wondering if some of your hearership doesn't really understand what that is or realize how available they are.
Well, I'm glad you're bringing it up, actually, because healthcare saving accounts are very powerful. I mean, when you contribute to them, it's tax deductible like an IRA. The growth is tax free, and the withdrawal is tax free like a Roth if used for medical expenses. It's a good way to set up that reserve to cover those high deductibles like you're talking about. Yeah.
So I wanted to bring that in there, but like I said, you picked up on it talking to your guest there. So I don't know how important it is. I thought I'd also make a remark about giving up a meal to pay a medical expense. For some people, that might be the healthy thing to do.
It's true, Steve.
Now, Steve, you're absolutely right, but you better behave yourself.
No, Steve, listen, you're exactly right, brother. I mean, there is, and Mark, it is a sad thing, and I don't want to make light of it at all, but there is certainly an obesity crisis in this country as well, and maybe it's giving up a meal, or maybe it's giving up certain types of meals, maybe it's giving up certain types of food.
There's nothing wrong that once a week doing without a meal, or even not eating that day, and doing it to the glory of God. Steve, I'm really glad you called in and brought up the HSAs, because I think I glanced over it, but I really didn't go deep into it. And to let people know that these are easy to get into, they're easy to set up, and that there's a lot of benefits to them. Your call actually brought us back to that so we could cover it more fully. So thank you so much for your call. Really appreciate it. And I'm sure a lot of our listeners did too.
Absolutely.
God bless you, sir.
Yeah.
All righty. Yeah. I love that when somebody calls in with stuff like that. That's an excellent thing, because oftentimes we could glance over a topic. For example, I was having a phone conversation the other day, and I said BRI to the person on the other end, and just kept talking. And she finally stopped me and said, Mark, what is BRI? Not everybody is living in the world that Seth, you and I live in. Biblical responsible investing. Oh, okay, I get it, because we were talking about investing with integrity, right?
Yeah.
And so it's like, I'm so sorry for using acronyms like that and just glossing over it as if everybody knows everything we're talking about and they know the depth of HSAs and they know this and that. Appreciate it so much, Steve. And I appreciate actually all our listeners and the calls we get, because it's things like that that help us to help you more when our listeners ask questions. And the way you do that is call 610-363-1110. That's 610-363-1110. And we try to get to your calls right away when we're able to. Sometimes we're in the middle of interview like we just had with Samaritans, but that's good information too. So don't be shy. You might have a question or you might have a point to make. And so far today, the calls have been excellent, I believe. And I'd love to hear from you a little bit more. 610-363-1110.
My wife and I helped lead a Crossroads Kids Club, and one of the girls, she said, Mr. Dave, you keep talking about like you didn't really believe in Jesus and you were like dead or something, and then like you believed in Jesus and then you're like alive, and I want to receive that. And so we like just prayed there in our group to receive Jesus and owning this idea of life with Jesus for the first time.
Help reach kids with the hope of the gospel. Visit reachourschools.com.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone, and ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
You know, Mark, I do love seeing, we're getting a lot of chat responses to what we've been talking about here. And I think just a good reminder for us when we talk about HSAs, some of the kind of the guardrails of who's allowed to use them, who's not allowed to. You can use an HSA if you're on like a Samaritan Ministries. But Mark, I know there are some other kind of guardrails also that may be good for our listeners to just know.
Yeah, you can't contribute to an HSA if you're not on a high deductible health plan, for one. Or you're on Medicare, or you're claimed as a dependent, or you're covered by other non-qualified insurance, or if you're using a traditional FSA, and the last one was receiving certain VA benefits. So there are sometimes where you can't contribute to an HSA, but if you already have an HSA and any of those things pop up, you still can use the money from that HSA for your medical bills and those kind of things.
Exactly. And you can invest that money as well. And so that money could still be growing a little by little, you know, even if you're not contributing to it, depending on how the markets are doing, obviously. That's good.
Obviously, it's a government thing, so they tried to make it as complicated as possible.
Didn't they, Mark? Well, speaking of government things being complicated, guys, we forgot to mention private equity could be coming to your 401k, apparently. Sam, give us the details here. More complication, right, Mark? What's going on with this here, Sam?
That's right. So the Labor Department is unveiling proposed new guidelines for including alternative investments in 401k retirement plans. Things, like you said, like private equity, private credit, and even cryptocurrency. So the goal here is to create a clear process and reduce the legal uncertainty for plan sponsors around these things. My understanding is right now, it's technically not illegal to have these things, but there's so many legal unknowns, and the government's trying to clear that up. President Trump actually directed regulators last year to expand access to private markets in retirement accounts, and if finalized, it's estimated this could potentially open the doors to trillions of dollars in 401k assets. But my question is, Mark, if this becomes a reality, is this actually something good for people to take advantage of? What do you think?
You know, a lot of money's been made in private equity. You can't deny that. But at the same time, a lot of money has been lost in private equity. And unlike a stock trading on the exchange, private equity doesn't have the same transparency. Often, to get involved in private equity, there's a lot of big fees involved. And complexity in private equity is substantially more than just looking at stocks. So I worry about this a little bit. Depends how they're going to do it. If they're going to do like a private equity ETF, and then there's managers managing the private equity, and you don't have to, that might work. But otherwise, boy, I mean, even liquidity issues. Think about this. You're in a 401k and you get fired. You want to move your 401k. But most platforms aren't going to allow you to bring that private equity over with you. How do you get rid of it? Well, a lot of private equity have holding periods that are longer term. A lot of private equity investments don't allow you to just get out on a whim. So there may be issues there as well. There's a lot to think about in this. Would it be nice for the educated investor or somebody to be able to do that? Possibly, but I don't know. I know people are screaming and saying they want it, but be careful for what you ask for. That would be my bottom line on it. If it does come in, it won't look like the private equity that we see today, where most people can't participate in.
Well said, Mark. Good to know with that one there. Hey, Mark, we got a couple good questions here. This was an email that we got from a partner named Roger. Roger's so thankful for the ministry. I've had some really good email interchange with him back and forth. But here's his first question. What's the difference between, and I'll just say our ticker symbols here, SIVR and PSLV? For reference, Mark, that's Aberdeen Physical Silver Shares is SIVR ETF, and then Sprott Physical Silver is the other ETF. What's the difference between those two?
Well, actually, one of them is actually physical silver. When you buy into the Sprott, you're actually, well, hopefully you are. They say you are. You're buying it like the Sprott gold. You're buying it. You're actually buying in, and they're buying gold with the monies that come in to back it. The other, I think it's the PSLV. It doesn't really hold physical silver. It holds, I guess, futures and options and things to track the price.
Mark, I'll just make a quick correction. So PSLV is Sprott Physical Silver. SIVR is the Aberdeen.
Yeah, got them backwards on that.
That's okay.
Yeah.
That's okay.
So one of them tracks the price of silver. One of them leans more towards physical silver. Yeah. That's the difference in those two primarily. When it comes to stocks like Ego, FCX, Vail, NIM, those aren't commodities themselves. Now, they're companies that produce commodities, but they're corporations, not the commodity. So it's a corporation that may mine silver or gold or precious metals, but there's a whole lot of other things involved with that company's price than just the commodity itself. Sure, if the price of commodities go up, there's a good chance that good miners will go up too, or good precious metal companies that are processing them or doing something with them will go up too. But there's other factors that will impact the price of that stock, and that includes the management, the efficiency, the expense ratios. What does it cost them to get it out of the ground, and are they breaking even? There's all sorts of things that go in that affect the price. So it's not the same thing. It's in the same arena, but it's not the same thing.
Good stuff. Roger, thanks for that question, brother. Mark, a similar question we got here. Actually, this is from William. Similar, but slightly different. He's in Alabama on our chat. He's asking, any suggestions on where I can sell some silver bullion?
Well, I really don't. I used to have a precious metal person here in St. Louis that I used, but he retired years ago, and the people who took over for him just didn't convince me that I could trust him as much as I trusted him. So I don't have anywhere. I guess there's a couple of places online. I know there's a couple highly recommended online companies that buy and sell. Seth, you once mentioned someone.
Yeah, Mark, we have historically referenced APMEX, APMEX, but it's not the only one out there. There are some other ones too. I would just say, Mark, with whatever William decides to use, just make sure that it's vetted well, that it's legit. APMEX seems to be one that definitely is, so that could be maybe a place to start, William.
Right, and I would shop because if you go one place and they say, well, this is what we give you for the per ounce of silver that you want to sell us in that form, shop it around and see if they're way overpriced or way underpriced, because they're going to put commissions in there for the buying and for the selling of that. And those commissions aren't regulated by anybody. So they can say, well, we charge 3% on both sides, or they could say we charge 10% on both sides. So be careful. Just do a little shopping, be educated, and be careful.
Yeah, absolutely. I think that's the name of the game, Mark. Really good.
Yeah, it really is.
Nathan from Brandon, Mississippi had a question in the chat actually today, Mark. So he's wondering if he should sell TE2, that's A Lab, or double up, all things considered. So for him, Mark, this stock's been on a downward trajectory for the last 6 months. It's still up 100% from 53 weeks ago, but he's down about 58% right now personally. He's not sure what their future looks like. What do you think? Should he continue to hold it? Should he pare back? Should he put more in?
Yeah, well, obviously you got to give me a second to look this one up live time, because I don't remember all 100 or so or a few hundred
absolutely
companies that we have on the list. And
Mark, that is a shocking admission on air.
I know.
I know all of the data at the top of your
We
head.
got a lot of it.
Yeah.
I'll say, Mark, while you're finding that data, this is a company, it certainly is a growth holding. It's in a growth space in that technology, semiconductors, space also. So there's no surprise that it's been behaving like an aggressive growth type stock for sure.
Yeah, and it is a growth, and it's got a great future. The potential is incredible. Earnings are forecast to grow 29%. It just became profitable this year, if I'm looking at this correctly. So that's a good thing. And a lot of analysts are on board that this stock could rise over another 100% within the next few years. So. One of the things that concerns me is a lot of insiders have been selling over the last 3 months, but you can't blame them at this price to take some money home. It's looking pretty good. Let's look at the health of the company here real quick. We got about a minute and 30 seconds. Oh, sure. They're debt free. Debt to equity ratio is 0. They have $1.4 billion in short-term assets to cover both short. This might be a good time to double down on this company. So what a great question to end the show with. A Lab, they got pulled back with everything else, and because they're newly profitable, a lot of people get out of those stocks quicker than they do other stocks, and that makes sense. But here at Financial Issues, if they got financial steel and they have potential, we're willing to weather it with them because we can see the potential, and we trust that going forward, as long as they maintain that financial issue steel, we can hold on to them. And I'm so glad you're with us and asked that question. Thanks for bringing it up, Seth. Also, thank you all for being with us. Thank you for your love for the Lord. Pursue Him with abandonment. I encourage you, pursue God with abandonment and continue to honor Him in all you do, including your investments. So God bless you. Thank you for loving God. Thank you for investing with biblical integrity. And we'll see you all tomorrow. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.